Canadian ADP jobs. But obviously the markets are undermined by the situation in Ukraine, blame and counter blame from both sides. The Russians claiming they're withdrawing troops and tanks. Another 30 went back to bases today, apparently. But then there's shelling being reported in the key region on the eastern border of Ukraine, the Donbass region. Obviously, the West pressing Russia further. Sentiment was raised earlier on this morning when last night Blinken, the Secretary of State, U.S. Secretary of State, and Sergei Lavrov are supposed to meet late next week. That was the key word for me. It's late next week, so as if things are gonna sort of tick along until later on the week when these two guys meet. The caveat was assuming there was no more further incursions into Ukraine, as the Americans put it. The Russians are still saying their security concerns are not being met, but that's the main thing. Obviously, it's been undermining markets all week, regardless of what the data is telling us. Whoops. There we go. This is the this is the gold market. This is the 5-minute chart for gold here. And yesterday, this morning, late last night, we pitched over the key 1900 level. This is the 5-minute chart for today. Over 1900, we come all the way down to 1886 after the news sort of filtered through about the Lavrov Blinken meeting, but we're currently now back at 1897, moving to the upside. So let's again see how all that pans out. Now then, there's nobody here, which is always a bit of a worry. I'm assuming there's gonna. I don't know if I'm talking to myself, but anyway. Let me keep going, see what happens later on. Okay, so gold's moved up from these lows, 1886. Let's go through the other charts. So dollar index is the 1-hour chart for dollar index. It's been moving down all week. This is Monday's high up here over at 96.30. Dollar index is weakened all week into 95.65 on Wednesday. That's also last Friday's low. 95.65. Let's move up a bit. So that's last Friday. Here we are this Friday, and we're pivoting through 95.75 as far as the dollar index is concerned. So 96, big line in the sand for dollar index. Euro can't get back to 114. This is again going back beyond last week. So we went under 113 on Monday, as low as 112.75 down here. And then we've really been pivoting through this 113.65 area yesterday. So Wednesday, yesterday, and today still. So little direction up, little directionless, the euro. Dollar. Yen, on the other hand, obviously got a bit of a safe haven bid on the situation in Ukraine. So dollar, yen been moving down since Wednesday's attempt to get to 116. We went as high as 115.86 on Tuesday, and we've been descending ever since then. So Wednesday we were down into the end of the day. Big move down yesterday where we breached 115 itself as low as 114.78. Today's highs took us to 115.29, and we're back down to test the key 115 pivot on dollar yen. Now then, there's another one here, which is always a bit of a worry. Forex is. We are live on Facebook. That's all right. So I can see that. So I just need to check. That's live as well. Yeah, good. All right, we're all off and running. Let me get back to you guys. Right. Okay. I just can't see anybody. Why can't I see anybody? Why isn't anybody here? It's a bit of a strange setup for Friday. Anyway. So where was I? Dollar yen 115, big round number. Sterling, on the other hand, has moved quite aggressively this week, inversely, as the dollar's weak. Obviously, this is pound against the dollar, so we're moving up from below 135, 134, 134.85. We were into very briefly on Tuesday, Wednesday, Thursday high. Friday we've peaked yesterday we pitched over at 136. And we're touching 136.43, which again, we look to the left, that took us back to last Thursday, post ECB and Bank of England, where we went to 136.45. So sterling certainly bid against the dollar here, and currently holding 136, but we'll see how that holds up into the US session. So we've got ADP numbers from Canada. We've got existing home sales, mixed numbers from the housing market yesterday out of the United States, and lots of Fed speak later on. We had that key speech from Ms. Mester early this morning, talking about a faster rate hike cycle, and also a faster diminishing of the balance sheet for the Fed than we had in 2008 after the 2009 after the great financial crash. So no surprises there from Miss Mester. Big hawk on the Fed, and we'll see how all that continues into March and next week and into the end of the final quarter, end of the final quarter. So where were we? Dollar yen up. Sterling up. So the commodity currencies again rising against a bit of cooling off on the safe haven on the dollar. So Aussie went over 0.72 yesterday, pivoting through it yesterday. But again, another one's been rising all week. We've got our lower highs and our higher highs, trending higher, over 0.72. We went to 72.20 yesterday. We've pitched a bit higher than that, 72.25 today for the Aussie. Obviously, the main Australian banks are all closed, and Australian brokers, traders are starting their weekend. So Aussie hangs on to 0.72 at the moment. A high from last week after the weakness of the dollar there on the 10th, on the Thursday, took us to 72.46. I say data yesterday out of the United States, so biased to the downside. We had that very strong retail sales number yesterday out of the United States, adding to the inflation woe, so therefore adding to this argument of the central bank, the Fed, moving quicker and higher than expected, balanced by the worry that they might move too quickly, diminishing jobs and diminishing growth. So it's that continuing balance, but somewhere in between, it's usually where the Fed will land. So we see that in the minutes. There was nothing in the minutes from the Fed this week, but obviously their next meeting now, all eyes really on the 14th, 15th and 16th of March, where the next Fed announcements are. So there doesn't seem to be anybody here, which is a bit worrying. There's no comments or anything, so not sure what's going on. There's Andrea Horn. So let's have a look. That was Aussie. Kiwi, similar sort of pattern. We're over the 0.67, so you see the Kiwis follow the Aussie higher as the dollar's weakened a tad this week. But again, another one's just trending to the upside, testing those highs from last Thursday. So that's a Kiwi. Swissy. I don't want to remember what that was. Oil market. Very, very key market we're in this week. Sorry, I just lost my throat. So this is the daily on the oil market. Earlier in the week, we pitched all the way up, testing $94, 93.78. Since then, we've rolled over with the really the thing that's moved it is the breaking news. Obviously, you would expect oil to be pitching high. I mean, it is obviously relatively high, and it's going to hold up here, but it's rolled over the $90 a barrel level. Let me take you back to the 4-hour chart here. So the $90 a barrel level here, big down day on the inventory, but that was really that big candle here on Wednesday was the announcement that the US and the Iranians seem to be making quite significant progress, both noises out of Washington and Tehran, spinning this very positively. So potential not necessarily ending of sanctions completely, but certainly would allow more Iranian oil to be pumped and onto the free market rather than some other illicit way. So oil, US oil here from that just shy of $94 at 93.78 early in the week. We've rolled over, we're down to test $88 again, which takes us back again to last week. We go to the 1 hour chart here, and I zoom in for oil here. You can see we're testing this $88 level today, which takes us back to this again, this last Friday's level, and through that level there here from earlier last week as well. So $88, $90 given up quite quickly. So, but overall, if you can see on the daily time frame, oil has had a really, really good run. There's the, I'll zoom this up, I'll zoom this in. You can see this pink line here is the 21 EMA, or the 20 simple moving average, sits around here at $88, which is where we're testing now. So a big break of that towards the end of December, and we haven't looked back. So it's been a big old rally for the oil market through latter half of December, all of January, and so far 3 weeks or 3 weeks of February thus far. So oil remains big, very much in focus. But if more news out of Tehran seems positive, you might have a bit more pressure on the oil price. And finally, equities in this little wrap up here before the news comes out. This is the S&P 500 on the daily time frame. The key thing I'm watching now is the this 200-day moving average here. Last time when we sold off, we had obviously a very weak January for equity markets. Very, very punishing January, the worst January since 2009. So we were 1, 2, 3, 4, 5, 6, 7 days under the key 200-day moving average in January. Thus far in February, we've rallied through this key 4,500 level, topped at 4,000, just shy of 4,600. But now we're back under the key 200-day moving average, and we're now into our 5th day under. So 1, 2, 3, 4, just about closed on it. We'll count that as negligible. So 1, 2, 3, 4, 5 days into our 6th day now under the key 200-day moving average. So that remains weak. So what was support here in the first 2 weeks of February is now turning into resistance. And if we go to and this is the S&P 500, it's sort of playing mid-range between the USA 500, the Dow Jones Industrial Average, and the tech-heavy NASDAQ. If we go to the NASDAQ, the USA 100 on the daily time frame, you can see our 200-day moving average there. We've been under it yonks, so it's very much the weaker performer of all the US markets, certainly the 3 major ones. We haven't been over our 200-day moving average on the NASDAQ significantly, just to that 1 day at the beginning of the month. But really, it's mid-January before we were holding that, and it's been a month now since that 200 days been breached really on the NASDAQ. So NASDAQ's looking quite weak. Key support was that intraday spike down to 13,700. So 14,000 is the big psychological round number for the NASDAQ. 13,700 is the next down target for bears on that one. But as you can see, the 200-day rejected twice, and that's moving down. Others might argue that's a bit of a head and shoulders performing, but it's consolidation for me. That still looks weak to the downside for the NASDAQ. And that's in line with what we might be expecting with regard to obviously the outlook on inflation and the outlook on interest rates. A faster, more aggressive Fed hike cycle weighs on the tech-heavy NASDAQ more than it does on the industrials in the S&P 500 and the industrials in the S&P 30 as well. So the tech companies remain the main driver of the US economy, but big sell-off in January, but still overall, it's been a huge rally from the pandemic lows down here at 6,600. So a huge rally, consolidation, sold off quite significantly, as you can see there on that chart. Very, very brutal. January recovered a bit, but still, that's the one. Techies like me are looking at that key 200-day moving average, and it's looking, it's quite a while now since the NASDAQ breached to the upside. So anyway, see where all that pans out. Let's have a look. So we've got some questions from Facebook. 4-hour trade on the pound yen, says Quasi. Let's have a look at the pound yen. We haven't actually looked at the pound yen, the old guppy. Very strange. What's going on today? Sonia, hello. You're my first arrival from YouTube. Sonia, good afternoon. Good vibes to you as well, my friend. For some reason, nobody's here for 6 minutes. Something might have been going on. Who knows? Bit of a delay. Guppy. Let's have a look at the guppy. Where are we? Just minimize that. And pound yen, said music. So 1 hour time frame. So again, going back to what we were talking about before, the week basically it's been biased to the upside. So this is Monday. We were down here at just 155.50 was our low here on Monday. In fact, 155.30 was lower than I thought it was. 155.30 was our low on Monday. And again, it's another one that's sort of been moving up, but not with great impetus. We've ran into 157, bounced off it, ran back down to 156, ran to 157 again today, and then haven't moved down as much as we did yesterday. So it really needs to break 157 to the upside. This is the 1 hour chart, but Moosey's asking about the 4 hour time frame. So on a 4 hour time frame, we had this big rally here from the end of January to this 158 high on the 11th last Friday, last Friday, and then we moved down. Some very, very significant candles here on Friday's close. We moved down again on Monday, and then we ticked up this week, but really it's non-directional, Moosey. For me, that's a no trade. Look at the flat moving averages, no direction. I'd like to see a break of 157 to the upside, or a significant break of 157, and even this 156 to the downside, to be honest. So big 100 pip range, which isn't that much for the pound yen. It is for some currency pairs, but 100 pip range for the guppy is not that big a range, to be honest. So, but they're the two I'd be watching. That's a no trade. Nothing's happening for me as a trend follower. That's really your oscillators. Look at your oscillators for this sort of setup on the pound, or for the pound yen, my friend. Sonia, as I say, good vibes to you as well, my friend. District 9, that's a interesting handle, my friend. Euro dollar, well, it's as I said earlier, it's not a lot going on, to be honest. We had this big rally last Thursday when we came within a smidge of 115, and then we had a huge sell-off Monday and Tuesday as the panic sort of started to pitch up. We went under 113 here on Monday, and we've sort of been rallying since then. So Tuesday we were up, Wednesday we were up, couldn't get to 114, and then yesterday we sort of dipped down again, but we didn't get back to 113, and we're really going sideways. So much like we just looked at the pound yen, it's very much of a channel range bound sort of move. Really, because there's not a lot of real data that's driving things. Plus, there's obviously the situation, as I said earlier, there wasn't many of you here, but I'll just repeat that obviously the markets are being underpinned or undermined, call it which way you will, by the situation in Ukraine and Russia. Obviously, we had this rally in the gold. Man, I always actually mentioned gold. Everybody has to go, oh no, Modsy's asked about gold. We had this big rally in the gold market. I started with this. I think I was talking to myself. I'm not sure you here. This is the 5-minute chart. We'll come back to this in a minute. But if we go to the 1 hour chart, you saw yesterday or this week we've seen this big rally in the gold market on the safe haven bid. And the risks of inflation hasn't really moved on the inflation story. Gold. It seems to be. Elbow cough to you as well, Addy, my friend. You go and start your weekend, my friend. You don't want to be listening to me, Addy, but if you want to hang around, please do so. So anyway, so back to close to 2021 highs on the opening of the market this morning. Here, this key 1900 handle, we pitched to 1902. But then on the story that broke earlier of Lavrov and Blinken, Blinken is the Secretary of State for the United States, and Lavrov, the Foreign Secretary for Russia, due to meet late next week. And that's a key. The key word is there is late. So the assumption being there's no further incursions into Ukraine, as the Americans call it. Blinken will meet with Lavrov later in the week. So that's a positive statement, which is why we saw gold move down like it did. Sorry, my glasses have got really dirty, and I can't see my charts clearly without the glasses on. So the glasses are going back on. So Modzi, we've had this move down to 1865.55 today. But again, it's a bit directionless. But obviously, as I'm speaking, we've tested the key 1900 level again. So it'll be interesting to see where we finish today. So the 1 hour chart here remains bid. We're over this is the 50 period moving average, the blue one here, significantly above that on the 1 hour time frame. This is our 21 EMA, the pink line here, the magenta line, flattened out since we moved down. So profits taken as we've rallied to 1900. Obviously, big psychological number, probably lots of take profits set up there, but certainly the news moves that down. But it hasn't, it's moved it down $10. It's obviously a long way in pip terms and point terms in the gold market, but that's been recovered now in the last 3 hours, up from 1886.55 to currently trading 1897. So on the higher time frame, if you go back to the daily time frame, you can see it's been a very, very strong couple of weeks for the gold market. And so those levels we've been talking about, all year really, have been very much range bound. The big round 1800 itself is all the way down here now, all the way down here at 1800. So 1815, 1830, and 1850 are the support areas. Now 1875, 1870 zone here, this yellow line here, which takes us back to this resistance we had here for November's high. So 1870 is now the big that resistance area now becomes support, and then you can see the next resistance area, which is now support, is sitting here at that 1850 level. So big round numbers still for the gold market, but we've gapped quite significantly just yesterday as we went to 1900, and as you can see, what on earth am I talking about? This is the daily time frame. Yes, sorry, it's February. So yeah, new 2022 highs. Well, I'm not seeing it, isn't it? Oh God, mad! I'm going mad. I must have been. What was I talking about? It was all the way back here, weekly, wasn't it? It was back to 2021 highs. Yeah, not 2022 highs. Anyway, that's the hourly. So excuse all the lines on there. So gold, yeah, bid to the upside. Addy, go and enjoy your weekend, my friend. Take care. District 9, which currency pairs would you advise to look into the coming week? Well, let's have a look at the coming week. I can't advise you what to do, District 9, my friend, but let's have a look at the calendar for what's coming up. In fact, let's have a look at what's gone on whilst I've been on here. So Canadian retail sales and housing index and ADP has come out in the last couple of minutes, or last 15 minutes. Housing price is still quite hot. Oh, I've lost it now. So look, there we go. Let's bring it actually on, share it on here, I think, can't I? These are economic calendars. So so this morning we had hot UK. For some reason it's not on there. UK retail sales numbers were quite good. Here, this is the Canadian data that's come out now. So retail sales not as bad as expected. So it's coming at minus 1.8% when it was expected to be over 2%, so minus 2.1%. Retail sales, excluding autos, worse than expected. So quite mixed data out of Canada there. Canada's obviously Canada in the grip of this blockade of, or what was blockade of the bridge, one of the main bridges going to the United States, outside the Parliament in Ottawa as well. Lots of anti-mandatory vaccine protesters. The truckers were holding things up. So lots of political pressure on Trudeau in Canada, and the data's actually okay there with that housing data and CAD data. But yeah, there's not a great deal of data. We just get existing home sales left to come. If we go to next week, we have the RBNZ, the next central bank, reporting next week. Before that, on Monday, the US is closed on Monday, or the US banks are closed on Monday. Obviously, our CFD markets will still be open, but the US banks will be closed on Monday, so lower volume. Japan's closed, I think, on Wednesday next week as well. So final week of, or the final full trading week of February. Obviously, Monday, the following Monday is the final day of the month, but still a key week as we move forward. We've got the PBOC, the People's Bank of China, with their interest rates even unlikely to change anything there. PPI data from Europe and Germany. As I say, RBA, what's the RBA on? RBA is on Wednesday, isn't it? Sorry, there's lots and lots of countries on here. So in play will be really the euro, as ever. We've got the RBNZ announcement here on Wednesday. Australian jobs also on Wednesday morning, and the members of the Bank of England meeting or testifying to the committee of the in the House of Commons as well on Wednesday. Thursday is a bit quieter. We got but topped by US GDP, the final reading of fourth quarter GDP, expected perhaps to knock out this 7% number as well for the US for fourth quarter GDP. Rarely the final reading gets upgraded, but we'll see what that number looks like next week. New home sales next week, excuse me, and then GDP from Germany, and the most probably for me the headline number is really the PCE numbers on Friday. So that's probably the head at top of the shop district with regard to the data next week. Remember the PCE number, this PCE personal consumption index, is the one that the Fed use as their sort of best guide of price inflation in the United States. So watch that next Friday. All eyes will be on that. But obviously, the main thing that's been undermining markets for a while, and depending when Blinken, assuming there's no changes, Blinken and Lavrov meet, if there's any other European leaders going to Moscow again, we've had a whole range of leaders meeting Lavrov and Putin over the last couple of weeks. That will obviously the thing that's undermining markets. So certainly for next week, we are, where have we gone? Oh, we are looking at the Kiwi in focus. We've had some quite key movements on the Kiwi because of the RBNZ. The euro, there's some inflation data and some PPI data, and obviously the bank and the dollar with regard to the PCE data on Friday. Remember, the US banks are closed on Monday and Japan is closed on Wednesday. So that's what to be looking for next week, my friend. Oni just came in. Good morning, or good afternoon, or good evening, wherever you are, my friend. Bharat, pound yen. We just had a look at pound yen on the 4-hour time frame. Let's go back to that. And it's really, for me, Barrett, I don't know where you're long, you're short, or what your outlook is, but it's not, it's very range bound. Why can't I? Where's it gone? So now, there we go. This is the 4-hour that the Muzzy asked for over on Facebook. Over on Facebook, and it's really not really range, not moving at all. You know, we're very much range bound to 157, big round number, and 156 at the bottom. Okay, so we've had this big rally up last week. We went to 158, so 158 has been our high following the Bank of England, the ECB last Thursday. We had a big move down on Friday into close, very significant. This is a 4-hour time frame, but I don't know again what time frame you change. Moved further down on Monday to test 155.35, so we breached that 156 level. Since then, we've been in this range bound, so we've just been going sideways, so there's no clear direction here on the 4-hour chart. If we zoom down to the 1-hour chart and then zoom in, you can see it's exactly the same, so it's just more exaggerated. But certainly, 156 is our line down here, and 157 our thick line up here. We can't get over it, banched into it a few times. Some big hourly candles, so Be careful with the pound yen. I'm sure you're aware of it. It moves around a lot, and it's known as the widow maker for good reason. Lots of pips on offer, but lots of pips can be taken away very, very quickly as well. So watch that one. So 100 pip range for pound yen is, it's a lot for some pairs, but for that pair, it's not that big a move, to be honest. But again, so really range bound without any direction. So not a lot to say, to be honest, Barrett, on that one, unless you've got your oscillators and you're playing the top of the channel, selling up here and buying down here. And again, I don't know what time frame you're on, but if we zoom in a wee bit, obviously that wider range is a wee bit tighter. So our top of a range yesterday and today has been at 156.90, so shy of 157 itself, and we've been bottom of our range today 156.28. So it's a 75 pip range over the last few hours for pound yen. It doesn't look, there's nothing really, there's no news that's going to drive that either way to either direction. So that's likely to amble within that range into the Friday close. But given that lots of profit was probably taken out on this big run up earlier in the week, but who knows how it'll actually end up. On close, futures says future index says Abuti. Again, I went through these a bit ago, but certainly the main dollar index, the main futures market, the S&P 500. Let me just move back to. I'm getting S&P 500. Where are we? Here we are. Let me just tell you the big picture. So obviously we had this horrendous sell-off in January where we plummeted under the 200 period moving average. This big green line here, 200-day moving average, the annual average, basically 200 trading days. So here we were 1, 2, 3, 4, 5, 6 days under it, breached it for 8 days, but now we're back under it for 1, 2, 3, 4, 5, and our 6th day, and we're down yesterday. Big down day yesterday. Through that 14-16 level, that's in there for a reason. I don't know why. It's highlights, so it's obviously key from before. So we breached that quite significantly yesterday. We lost 2.2% yesterday. We've bounced a wee bit. Futures bounced a wee bit this morning on that Lavrov blinking news. But really, the pressure is to the downside. So 4,375 is where we closed yesterday. Two of the levels I got marked in here at 4,350 and 4,330. But really, it's these intraday spikes lower, which take us to 4,260. So that brings in the 4,300 as the big round number for the S&P 500. So it's still biased to the downside on this higher time frames. And I said there wasn't many big people here earlier, but I was looking at the S&P 500. It's a wider and deeper index than the Dow, which is focused on industrials, and the Nasdaq, which is focused on the technicals. So the technical companies, the tech companies that have driven this big bull rally have come off the worst at the moment, particularly on expectations of higher interest rates, because they're more sensitive to higher interest rates than some sort of cyclical companies like I don't know, utilities or telecoms companies, something like that, electrical supplies, water supplies, that sort of thing. So the S&P 500, it's the most important stock index in the world. Weak. Okay, we go to the S&P, the USA 100, which is even weaker. So this is the same futures setup, USA 500 futures, but this is its 200-day moving average. You can see we've been under our 200-day moving average since the middle of January. Rallied to test it towards the end of January. Now we've been under it again for all of February. So the technical Nasdaq, the technicals on the tech-heavy Nasdaq remain even weaker than the S&P 500. So here, the big line in the sand, a big resistance sits with that 200-day moving average and the big round 15,000 level. To the downside, the intraday spike lower that we had in January takes us to 13,700. So that brings in the next level, which is the 14,000 level, as the support on the end of day basis. And you can see we've been going towards it, tested it on Monday's shakeout on the 14th. So again, bias to the downside, under our 20-day moving average, except for 1-2 days since that big break here, right at the beginning of the year. So it's been a weak start to 2022 for the Nasdaq. The January was its worst month since 2000, the worst January since 2009, and the great financial crash. So, Abuti, yeah, stocks remain pressured, and we've had some wild swings during earnings season. Earnings season's coming to an end. We had Walmart last night, big retailer, some good numbers and good outlook compared to some of the tech companies this quarter. We've still got some big retailers to report next week. Walmart it was the first of the big ones, but it really marks the end, towards the end of earnings season. So again, it's just another indication of those more traditional stocks doing better than the more tech-heavy growth stocks. So value stocks coming into play, churning into portfolios, and tech stocks being trimmed. And that's been going on. That hasn't just been going on this month. It's been going on for a number of months as well. So yeah, so there we go. And if you want to, for completeness, the USA 30, similar sort of story. See, we although here we were under, then went over. We were over here for a week or so over the two. There's that 200-day moving average here. We just breached it again. So 1, 2, 3, 4, 5, 6 days, a bit like the S&P 500, the USA 30, rejecting 35,000 this week, and another big sell-off yesterday, 2% plus. And again, the intraday lows at the end of January took us to 33,585, and below that, we were a smidge under 33, or just above 33,000 is towards the end of January. So again, even the Dow, or not even, but the Dow also pressured to the downside. Joshua, good afternoon, Ghana. Hope you're well, staying safe. Anything I can help you with? Any particular asset you want to have a look at on this weekly wrap? So it's been a particularly interesting week, dominated by the news flow from Europe, from obviously the eastern border of Ukraine, really undermining markets. We've had some strong numbers, some weak numbers. We had some good retail sales out of the UK this morning for January, but December was worse than expected. So it's that mixed bag. What gives with one hand is taken away with the other hand, and it's really inflation is the issue that's grabbing most central banks. And what markets are worrying about is the overreaction potentially of central banks. Remember, it was only a few months ago where they were talking about inflation only transitory. It was going to sort of peak at the middle of the first, second quarter of 2022, and all our stimulus is going to be taken away. So therefore, it was going to cool down. We're still looking at 4 or 5%. Inflation rate for the end of 2022 in the United States, we're at 7.5%, PPI at 9.7%, the producer price index, the main inflation measure for companies. So it's much deeper and broader and wider. Perhaps the Fed anticipated it would be, and therefore there's the argument that they're getting caught behind the curve. We've had the major hawk on the Fed, Mr. Bullard, talking about a 50 basis point rise in March and 100 basis points before July. So a very, very rapid and aggressive increase. And on the other hand, we've got some doves still to talk today. Actually, we got the doves on the Fed talking about worrying about the rate hike cycle being too quick and too aggressive, and the drawdown on the balance sheet being perhaps too aggressive as well. But the balance sheet is absolutely record highs and probably does need some trimming as well. Joshua, you're asking about gold. Well, gold's had a really good week to the upside, as we've talked about this a few times already today. But certainly from these lows we had here on Wednesday at 1850, a big resistance level to the upside, 1850 or so. We breached it here on Tuesday, came back to it Tuesday close. Rallied through, spent most of Wednesday just hanging on to it, and then we broke out Wednesday over the next resistance, which was 1870, and then we rallied yesterday and into closing this morning. We breached the key 1900 level, come down. That candle there was when the news over Blinken and Lavrov's meeting next week was announced. We went lower to 1886.55 is our low today. And we've tested 1900 again in the last hour or so. So it's still biased to the upside here on this hourly chart, but that's a big resistance level, 1900, and a huge psychological level. If we go to the daily time frame, see what a strong candle yesterday was, taking us to 2021 highs here at 1900. So this is February, this is January, this is December. So we've breached that resistance level here from November 1870 yesterday, quite significant. So 1870 now becomes our support, then 1850, then 1830, then 1850, and then 1800. To the upside, obviously 1900 is our key resistance level. And I say if I just zoom this in on the weekly, it'll get a bit messy, so apologies for that. But you can see this is the weekly time frame, and we're back here. This is the beginning, sorry, this is June 2020, when we were what we're talking about? June 2021, I should say, when we were last up at this 1900 level. As you can see, it was a big resistance there when we came down quite significantly, a huge sell-off week there in the middle of June last year. So big old move for gold this week, particularly yesterday, obviously, but it's been rallying and moving higher since the break of the 20-day moving average there on the 7th of February. So it's bid to the upside, still biased higher. The 20-day moving average is all the way down there at 1845 now as well, so little overextended. The RSI here is into its overbought zone at 77, but it's still rising. Stocks also into its overbought zone, but again, you see they're still, well, just behind me. Just behind my head there, you can see there the stochastic is still rising. So the daily remains bid. Obviously, any big withdrawal from Russian troops might take away the bid on gold, but really there's also the other thing that gold is still, always has been and always will be, a hedge for inflation. Inflation is really here, and it looks like it's staying and getting broader. So the gold move is a little late, but it's finally happened. Gold bugs would argue. So we'll see how we go. Edwin, hope that answered your question, Joshua. If you've got a different time frame, Joshua, put it in the question box and we'll have a look at it. Edwin, cable, pound, dollar, again another one that remains bid this week on the weakness of the dollar, and we've been back to test this high from last Thursday, the 10th of February, following the Bank of England and the ECB announcements, when we went to 136.45, and we tested that this morning. We've rolled off that a wee bit, but we're back down now. It's sort of half an hour before the US cash open, but we're still holding 136. So we went through 136 yesterday. 135 is all the way down here, which is where we went under on Tuesday and Monday here. Tuesday's low and Monday's low turned around quite quickly, and now we've been trending higher ever since. So these higher highs into 136.45 and the higher lows dipped. So now we've got this 45 pip range now going into the end of the week. Joshua is now over about 4 hours. So Joshua's about 4 hours. Okay, let's go back to 4 hours. So yes, I mean, absolutely, you could argue it's overbought, because here on the daily it's measuring overbought, because it's RSI 7. Remember, not 14, but 7 here is 77, and the stochastics very much in its overbought zone. But if we come down to the 4 hours, probably even more overbought. Yeah, so there we go. But as you can see, it's really been in the overbought zone most of the week. This is the beginning of the week here. You can see the RSI here on 7 settings being overbought. Change it to 14 wouldn't be so overbought, but our stocks as well. But I mean, it's still trending higher. Joshua, let's go back. It's still trending higher, basically. It's tested, 1901, 2, 3, 4 hours. So 1900, key psychological level, another key level we've moved into. So again, but you can see here on the 4 hour time frame, zoom that in. You can see the moving averages are nicely aligned. We've got the 50, the 21, the 9, the 8, all in unison, certainly since the early part of the week, after this dip yesterday. Bit of a cross to go low, but we couldn't break the 21 EMA, sideways, and then a big break there as we're back to the key 1870 level. So the first break was sold off. Second break testing burst through yesterday, which in effect took us the momentum, took us to 1900. See, the momentum was still dragging us higher. Momentum was dragging us higher. The MACD here, you see, dragging us higher as well. Although the MACD, you can see, looks a bit flatter. Sorry, see that rally up, but again, it looks like we're, and understandably, the indicators are playing catch up, but you can see big resistance at 1900. So here on the 4-hour time frame, we've tested it for 1, 2, 3, 4 candles now at it, or just above it, or just below it. So it's still biased to the upside, but you can see how the candles have reduced in size today. So yeah, still moving up, but that's still, as a trend follower, that would still, you'd still be long there, trailing your stop loss up perhaps. We did stop loss around about this 1886, 1887, perhaps a bit lower, or even at the 20. This strategy talks about keeping your stop loss at the 8 period. The middle moving average, so this 9 period moving average. So at the moment, your stop loss would be there, 1891. A bit more conservative, it could be down at the 21 moving average. Has played out really well for you, hasn't it? At 1879, so it still remains relatively well bid. How do you become such a good analyst? Just practice District 9 and just doing it basically. And there isn't there's obviously rules about how you apply the technical indicators and which technical indicators and how to read them and understand them. But I look at this chart and see something. Another technical analyst, you could look at it and a much better technical analyst than I out there would see something else. It's all about how you play it. But the other thing is, people say, well, that's it's all a bit mumbo jumbo. They're all indicators are all lagging. They're all slow. They don't react quickly enough. I'm only interested in price action. Well, that's fair comment as well. It's all in the price. That's one of the big mantras of price action traders, and that's correct. But here, a moving average has kept you in the game. It's kept you in the game, and you're still in the game. It's still trending up, but nothing, nothing in life is like that. Nothing goes in a straight line. But overall, this week, it's been a great week for the gold market. But this time last week, we go back to last Thursday. Sorry, if we go back to last Friday, where were we? Last Friday, it was having a rock and roll end to the day. This was long after I'd switched off on Friday. But the 8 o'clock candle or the 7 o'clock candle our time last week. This time last week we were down here at 1825. Not a lot of action was going on. It sort of broke out, but again, if you'd been a trend following trader, you would have been short, and then you sort of got a weak buy trigger there, right at sort of 6 o'clock my time on a Friday. I wouldn't, as a trader, I wouldn't have taken that because it's Friday night and I'm going off for the weekend. Thanks very much. However, we'd have missed out on a big rally into close. So lots of action in the second half of Friday's US session yesterday, last Friday, but we were still down here at 1835. And here we are. We've rallied all the way. We rallied we rallied Thursday, Friday, Tuesday. We rallied, but then we dipped down to 1850. But we've got an even more bigger rally this week, taking us back to 1900. Okay, so. There we go, District 9 myself. Joshua, what's the period? Let's just zoom all this up. Right, this is the setup on this black chart, this black background chart here, guys. Is the crossing EMA strategy. Okay, let's just ignore the indicators below at the moment. The moving average is on here. The blue line is the 50-period simple moving average. Okay, that's just it's just there because it's on this chart. It's not the one that you use to trade this strategy. The 3 moving averages this crossing EMA strategy uses is the magenta line, or the violet line, you can call it here, Joshua. It's the 21 exponential moving average. Okay, 21 exponential moving average. The yellow line is the 9-period exponential moving average. And the blue line, the sky blue line there, is the 5-period exponential moving average. So we've got 5, 9, and 21 on this particular chart setup. Okay, and it works on crossing. So this is a really good example of the rules should follow. So here we'd rallied to 1900, so we've been long here. Nice cross was down here, wasn't it? The final cross over the sideways here, so no good. Again, when markets are going sideways, moving averages are no good. Okay, what you want is an angle on your moving average and then to be aligned, and that's exactly what we got here on this relatively big candle here back. This is the 1 hour time frame. So this is back on the 16th. When was that? Day before yesterday, Wednesday. We broke over the 50 period here, and it really hasn't looked back since that break there. But we were along there, and you just trail your stop loss up behind it when you've got a big, strong trend like this. And you can see all the way up here, they've been in alignment. So we've got we can ignore the 50 for an extent, but the ones we're using are this purple, yellow, and blue. So nice trend. Came to an end abruptly here at 19, but again, lots of people would have taken that out because it's a big psychological number, and it was 1, 2, 3, 4, 5, 6 hours it stalled at 1900. But the rules would have, your stop loss would have been probably around about here now as we got to it. So you would have been stopped out around about there at 1897. But certainly that was a big downer. And then that looked like it was going to go short. But we didn't with the blue line crossed from above to below the yellow line, but we didn't cross the third indicator, the third line. So it looks like it's going to go short. We're waiting to go short. Didn't happen when it moved back up. So that would have, if you'd been aggressive, you could have taken another long trade there at 11 o'clock this morning with your stop loss round about here. That's then stopped you out. That's looking like that's going to go short at this point because it crossed up and then it's crossed back down. That's looking like, but it's it's big, isn't it? So that hasn't worked out. So you've lost that one, but you've had this massive gain here from Wednesday. So you've lost that one. You lost that short because again it turned around immediately, and now that would have triggered long, closing out that short in the last hour. So if you want to trade this in the US session, this particular strategy is now triggered long on the 1 hour on this 1 hour time frame. Okay, but Joshua, watch my scalping webinar for early because this works really well. All the way down on the 1 minute chart as well. It's obviously a lot more action on the 1 minute chart, but really the time frame you trade, it's really to do with what you can cope with from a risk point of view. So that's something for you to find out. Okay, so anyway, it's the 21 EMA. Joshua, these are exponential moving averages, not simple moving averages when you trade them intraday. Some people like to use this and use the midpoint of the Bollinger Band. So I've put the Bollinger Band now because the Bollinger Band gives you the 20 period simple moving average. So you've got the added advantages of the ranges on your Bollinger Band as well as the moving average, along with the other EMAs as well. Okay, that's not a problem, my friend. So any more immediate requests? That's all right. Quick look who's next. Nothing. What have we got on Facebook? Check. No, it doesn't look like I've got any more queries. Okay, right, Joshua, it's not a problem, my friend. So look, I think next data today is the 5 o'clock, or the 5 o'clock consumer confidence numbers from Europe, and the existing home sales from the US, and the leading index numbers from the US at 5 o'clock as well in 45 minutes. Obviously, the US cash open is 15 minutes away. Let's have a look at the futures market. The S&P futures, S&P 500. We go down to the 15-minute time frame. Yeah, it's been weak at all. This is the 15-minute on the S&P 500, and we've been weak all day basically. Interestingly, we've poked to our day low since I came on air basically. So we've gone as low to test that 43.53 area we had on our daily time frame. There we go. So that's happened in the last few minutes. So futures, USA futures, looking for a weaker open again today. We had a weak open yesterday, remember, and then we closed to the downside again yesterday. A little site I like, which is a free site, it's called, and it summarizes things really well, finviz.com. This is from yesterday. Let me just show you this. It's quite nice representation of what's going on. But you can see from yesterday, we opened lower on the Dow, the Nasdaq, and the S&P, and then we closed lower. See how we trended lower all day. So that is sort of what's happening here again on the futures market. We opened lower. This is the futures, obviously futures, not the cash market, but the futures market closed down here at 370, whereas the cash market closed at around 380 yesterday. So the futures were lower than the cash. That's always quite negative. So we spiked up a wee bit this morning on that Lavrov news. That was when was that? Yeah, that was this morning on that Lavrov blinking news. Couldn't get to that key 416, a daily resistance, and then we've weakened, and then in the last hour or so we've moved to the downside as well. And that so futures looking quite weak. So it's looking like a weak open for the major US indices at the moment. The hour one, so weak as well. So that's still pointing lower. And as you can see, last big move down candle was here yesterday, just before open. So again, it's a weak open yesterday, moved lower into open, and at the moment it's looking like a weak open. I mean, it may turn around because it's Friday, balancing off the week, but we shall see. Where am I? I'm here. Joshua, what causes the move of the USA 30, Nasdaq 100, and the DAX, the JER 30? Well, it's all to do with all sorts of things, but basically it's the economic outlook. It's remember what they are. These are weighted indexes, so it's how to do the companies are doing within those indexes. So here, Joshua, this is what's this? This is the USA 5. Let me use one of your examples. The USA 100. So this is typically, it is what it says it is. It's 100 tech companies. The Nasdaq is predominantly technology-based companies. There's a little, like for instance, at the moment it's not exactly 100 companies. The S&P 500 at the moment has 505 companies in it, but and it's all to do with, especially the Nasdaq, the weighting of the companies within that weighted index. So the big companies have much more influence on the movement of the index overall than some of the smaller companies. And for instance, the S&P 500, all those 500 companies in there, the big 5-6 companies, the big, well-known Facebook, Apple, Microsoft, Amazon, they account for nearly 23, 24% of the whole valuation of the S&P 500. So the 490 plus other companies, account for less than 75% of the, or just over 75% of the weighting of the S&P 500. So it's all to do with that, and then obviously the economic news around those companies, and then the general economic outlook of the country. So obviously with the US 30 and the Nasdaq, it's all about America. With the JER 30 or the DAX, it's obviously all to do with what's going on in Germany in particular, and Europe and wider Europe. Obviously the situation between Russia and the Ukraine has obviously had a big particular impact on the Nasdaq. I'm trying to find the Nasdaq as I'm talking. There we go. Here's the Nasdaq. Had a good week. Sorry, this is the one out. Yes, had a good run up. Sorry. So it's had a good. Oh, hang on, that's the wrong one. That's an old chart. Sorry, let me find that. That's from last year. I thought that didn't look right. We go to my indexes. I need to close that one. If we look at the where's the let's use the This is a different setup. This is a Heiken Ashi chart. But let me just clean some of those lines out. So this is the Heiken Ashi chart on the daily time frame. Here, the blue line here, different moving averages here. This is the 13 period. Oh, sorry, it's the 49 period EMA, the blue line, and the brown line is the 13 period EMA. So this is the 49 and the 13. It's quite good for equity markets. That's set up. So anyway, you can see weakness into January. They crossed. We were down. But we're right down here at 15,000, big support for the DAX. So, a weaker DAX as the big unrest in Ukraine and Russia weighs on the DAX potentially as well. We've got some big German companies reporting next. I think next week was Adidas, for instance, are reporting as well. So it's that basically, Joshua. I hope I've answered your question, so as you can see. But again, as a trend follower, that's been weak from mid-January, and it's not looking particularly good going forward. Is it still down at this bottom end of things, quite choppy, no clear sign. But if we go up to the weekly, you can see it's rolled over quite significantly, and big support area here at 15,000 itself. But we've been down here 4 or 5 weeks on the DAX as it's rolled over from these lows of from March 2020. Okay, Edwin is asking about pound dot on the 4 hour. Is that a support? Let's have a look, shall we? Possibly. Let's go back to our cable chart, 4 hour time frame. So what's going on? So as I said before, 136.45 is a clear resistance level. 136 big support. So 4 hour is what you said. What you're asking, Edwin, is that a support? What do you mean? I'm not quite sure what you mean, but yeah, I mean it's yes, you're right, but it's also Edwin, don't get it mixed up. It's a big round psychological number, 136.00. So this resistance taken us back here to this rally up for February. We ran to 136. We ran to 136 here. This is the 4 hour time frame. This is the beginning of February. Middle of February, we did the same thing. Here, this week, we've breached the 136, but we've come back to it. So that high 136.45, 136.45, 136.45 over here has been touched, but then sort of we're coming down at support. So strong up move. Yes, that's the support area, so 136 breach, but then here on this particular chart setup, your 21 EMA sits there at 135.87, so that's support 135.87. Technical or psychological support is 136 itself, so some 13 pips above that. And then below that, I've got a line here at 136.70, and then the 200 period 4 hour sits at 135. What's that? 135.58. Okay, but that, yeah, it's really that. What you'd like to see, that what if you long this baby, you'd like to see 136 itself hold into the end of the week, Edwin. I would say on that. But as you can see, we've had our run, we've had our break here. That was long. That got stopped out. That's long. We've been long since. And again, you'd have maybe your stop loss is around about you might have been stopped out in this hour because you would probably have stop loss around about here. But you've had a nice run on that this week. Close for the week. About enough. Thanks very much. But a close above 136 is positive to the upside. Crypto NL MMT. Yeah, so there's your support on cable. So we'll see where we go. Where else are we? That was CAD. That's cable. Yeah, so we're still the cash market's still not open. US market. but say it looks like it's going to be a weak start. Yeah, interesting sort of move here. Technically, yeah, I mean, if you again, if you look at this technically, Edwin, for your where are you? Lost you. Edwin, look at this technically, you know, obviously there's big wick here, but if we looked at like a leg up here, if we looked at our like, if we put a little Fibonacci retracement level on there, so from this low earlier in the week on your 4-hour chart, it's big spike lower here on the 15th on Tuesday to our high here earlier this morning. You know, we've ran into the first Fibonacci level, which sits just above the key 3600 level. So we've got a Fibonacci level in play here at 136.6, the big psychological 136 itself, and you can see also how the 38 is sort of clustering around the 38.2 fib level is clustering around that 21 EMA level as well. And then interestingly, the 61, the big major retracement level, slaps right on that 135.45 level we had from our daily time frame, and it's above that. Halfway between the 50 is the 200 period and then the 50. So lots of support levels going to the downside. What it needs to do to get to the upside is break this intra candle spike, which took us to that 136.45 level, which we rejected a few times. So again, you know, we're a key support level there from a leg point of view. If, and it's bad use of Fibonacci because that is quite a significant layout. So, and if you took the Fibonacci level and just ran it from candle body to candle body, you'd really want to be sort of down there, to be honest. So it wouldn't make much difference. But 136.06 originally, and here we are testing that 136 level. So 21, and this zone here is now coming into play. 138.87 where the 21 is, and the 38 fib 138.82. So a little 5 pip support there on your 4-hour. Edwin for cable. Let's have a look. Nobody else on Facebook, is there? No. So there we go. I'm going to have a cup of tea. If there's no more questions, I'll wrap the session up and wish you a good weekend. So let's have a quick review of where we are. So dollar index is rallying from this 95.75 level as we go into the US Open. We're at 95.91. So that brings in 95.95 and then the key 96 level. So dollar index is up. So dollar's been weak. It's come back in the last couple of hours. So euro will have dipped down in the last couple of hours. So euro's been pivoting through 13.65 for Wednesday, Thursday, and Friday. Today we've moved down. So our next test on this 1-hour time frame is that low from yesterday, which took us to 113.25, and on an end of candle point of view, end of hour point of view, 113.47 for euro here. So see what that 5 o'clock data brings. But that's certainly bringing in that candle low here from yesterday, which may find some support. If not, we're going to go to 113.25, which takes us back here to Tuesday and that Monday test of 113 for euro. Yen, same sort of it. So yen into the US Open, 115 is a big support level. That breaches, and we could easily bring in 114.78 from yesterday and earlier today. End of hour support sits at 114.85. So 114.85, 114.78 if the 115 level breaks to the downside. Oh, you are so funny, all of you. That's yen. Cable, 1 hour. Say we've I've just been through all this, haven't we? 136.45. 136 is the big support zone, and I'm not going to go through all that. We've just been through that, haven't we? Aussie, Kiwi. Anyway, let's have a look at CAD, because CAD have had some data out whilst I've been speaking, and there's some US data still to come. So dollar CAD Another one that's sort of meandering through a key pivot area, and this one is the 127 level, 127.00 yesterday and today, and the 200-hour moving average sits at 127.06, which we've ran into this hour, sort of trying to get over it. But 127.15 was our high from earlier today. Yesterday's high. Obviously, the oil market is weakening a tad. 127.33, so 127.15, 127.33 from yesterday. The support, if 127 breaches later on today, is through here, which is today's low, yesterday's low, and Wednesday's low, 126.72, and then 126.65 from Wednesday to the downside for CAD. Traders, oil and gold. I'll finish with oil. Continues to weaken, testing $88. We're at 88.15 at the moment, trending lower for the day. So far, our intraday low has taken us, I think, to 88.30. It was, wasn't it? No, 87.40. So under the midpoint to $87. So 88 is the key support level, having breached $90 yesterday and been under it for most half of yesterday and all of today. We're under key $90, so oil moving down. And finally, for the last time, we'll finish with gold, having dipped to 1886.55 from the news about Blinken and Lavrov meeting, from a breach of the 1900 level and a high of 1902 earlier this morning. We're back to 1895. We've tested 1900 again in the last hour, so still sort of biased to the upside gold market. And I say finally, the stock markets just opened. Just before they did, we went as low as intraday 43.59.60. Big down hour before the markets opened. We've just opened now. Let's have a look to the open. Yeah, futures are. When did they? When was that? That was quite a bit before, wasn't it? So it was an hour before open. We went down to 43.59, and the futures have bounced a wee bit, but it's another weak open for the US equity markets to the downside. I say big sell-off yesterday, 2%, 2.1%. What's the Nasdaq? Nasdaq lost 2.8% yesterday. The Dow lost 1.78%. So again, the best move, although it lost 600 points yesterday, the Dow. And the S&P lost 2.12% yesterday, 95 points. So the only green in the market yesterday was really outstanding. The one that stood out was Walmart's 4% rise on those good earnings after the bell. But the overall momentum was to the downside. So that's all for this week, guys. Have a great weekend. Stay safe, and we'll see you all next week. We'll do it all again. And be good. All the best, everyone. Bye-bye.